Good afternoon, ladies and gentlemen, and welcome to the AQUIS Exchange PLC results for the period ending 31st of December 2020 investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company review all questions submitted today and publish responses where it is appropriate to do so. These will be available via your Investor Meet company dashboard, and we will notify you by email when they're ready for you to review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and if you could give that your attention, that would be great. And I'd now like to hand over to Alistair Haynes, CEO, and Jonathan Cleland, CFO from AQUIS Exchange. Good afternoon to you both.
Good afternoon. Thank you, everybody, for joining us on this presentation about our results for the year ended the 31st of December 2020. As a founder and CEO of this business, it is a great moment when one achieves one's first year of profitability, both operating profit, pre-tax profit, and post-tax profit. So it is a sort of proud day for me, and thank you for sharing it with me. Before I start going through the results in detail, I just wanted to remind everybody about AQUIS Exchange PLC. We are one company, and we operate three divisions. And those three divisions is the original AQUIS Exchange, which is the MTF that trades in 1,700 stocks, the large cap stocks, across 15 different countries in Europe. And of course, courtesy of Brexit, we opened up our office in Paris last year, and we operate a regulated entity in Paris and a regulated entity in London. The AQUIS Stock Exchange is the second division, and that division there, originally 1 year ago, we bought the Next Exchange. I think you're well aware of that, and we have transformed that business. And we'll spend some time later today talking about the changes we've made and the differences between us and the London Stock Exchange and what we're looking to do in the primary markets and how we're looking to change the primary markets in Europe. And the third division is the AQUIS Technologies. And that is a business where we license, often under a SaaS model or a subscription model, the technologies for exchanges. And again, we'll have a lot more detail. So it's one company, three divisions, and multiple products. So look, as I said at the very beginning here, this is a very proud day. It is a very important day. And I think the confidence that one gets as a business when you achieve your profitability gives you that strength to move forward. And I am incredibly excited about the opportunities that 2021 and going forward from here hold for us. It was without doubt a strong financial performance. And I think it's very important to reflect on the fact that 2020 was not an easy year for anybody. With lockdown, and with COVID restricting movement, with Brexit later on in the year, and the issues discussed at the early parts of last year concerning Brexit, this wasn't an easy environment to transact business. And as a result of that, it has been hard to build. And I think it says something about our supporters, the people, and the business model that we've been able to achieve what we have achieved in 2020. The core business remained strong. And I think I was absolutely delighted to see the seamless move to Paris. In my life, I've been working in the industry for over 40 years. I think only once before have I seen liquidity shift overnight in the same way that it did on the 4th of January this year, when literally movement of all the trading, 99% of our European trading shifted to the French entity and has remained there ever since. I do not believe it's coming back. I think that's good for customers because there's no fragmentation of liquidity, and it's good for AQUIS because we were able to actually achieve that goal, something I think investors were concerned about as to what would happen given the outcome of Brexit. As I said, the AQUIS Stock Exchange, the Next Exchange, we bought almost exactly 1 year ago, and that transformation has gone very well. We've integrated the technology, we've integrated the people, we have changed the rules following a consultation in the marketplace, And we are positioning ourselves to become the home of growth companies in this digitalized new market economy. And I think that is really important. We are not trying to compete directly with the London Stock Exchange or AIM. We feel that Europe needs a NASDAQ of Europe. In the same way in the 80s and 90s, we saw NASDAQ be the home for fintech businesses. The new economy and the way that markets are changing, we want to be seen as the venue of choice for those types of companies. And of course, some of you will have heard about AQUIS Technologies and the announcement we made towards the end of last year, where we did this deal with Singapore Exchange and Amazon Web Services, where we built this proof of concept about putting an exchange grade technology in the cloud. And we will talk about that in a few minutes. So let's look at the KPIs. Again, the three different divisions, in all of them, we actually saw significant growth and were very pleased to achieve the KPIs. One figure that is absolutely essential for any exchange, large cap, small cap, or whatever, is the liquidity. Liquidity is the lifeblood of any exchange. And I'm very pleased to announce that the amount of liquidity in our exchange business has reached 23% of all the best prices, bids and offers, and depth of liquidity in the top 1,700 stocks across Europe in those 15 different markets. That has increased from 20% last year, and that makes us the largest supplier of liquidity of any exchange in Europe. Our market share grew from 4.2% to 4.7% and has continued to grow. We built the number of membership from 30 to 33. And as I said before, though, during lockdown, it hasn't been an easy process. And what I'm, again, very pleased to tell you is that in March 2021, so right now, we further increased membership by another 6 members to 39. And probably the most significant number looking at the change in the company is this thing in the box, 50% growth in average monthly aggressive orders. Now, these are the chargeable orders. If you remember, our model is a subscription model. We charged on the basis of message traffic and what we call aggressive, when people actually take orders in a marketplace. They're not the passive messages. These chargeable messages grew by over 50%. And that proves, I think, that this subscription model, which offers people at the highest tier this marginal cost of zero, which has changed and transformed the retail market through Amazon Prime, or the music industry through Spotify, or the film industry through Netflix. I think this is showing that AQUIS is now starting to change the equities industry because of the growth and this marginal cost of zero, which really helps improve liquidity, which is what everybody is searching for. Our market share has continued to rise post the 31st of December 2020. In fact, it has reached, as of today, for the very first time, above 5%. Now, that's important. When we took the company public, we were around just over the 2.5%. But that was 2.5% of what we call lit trading and not total trading. So we've made our target harder. And today, we are executing over 5% of the total equities business in Europe, making us the 7th largest exchange in terms of turnover in Europe. The liquidity slide shows again this growth of liquidity. If we look at our peer group, and why I say we're the largest, you can see the blue horizontal line demonstrates every stock, the bids and offers in every major index across Europe. And we sum up the bids and the offers continuously throughout the day. So if people are achieving best execution, it is clear that AQUIS provides the deepest pool and the largest pool of liquidity available to people across large caps. So as regulators start to focus more and more on best execution, it is very hard for a firm to prove to its end clients that it is achieving best execution when they don't have access to the AQUIS exchange. I'm now going to pass over to Jonathan Cleland, who's our CFO and COO, who will talk you through the numbers.
Thank you, Alistair. So Alistair already referred to the achievements of the main KPIs through 2020, and that really sort of underpins the growth in revenue that we've achieved across the year. So you'll see exchange revenue in excess of 40% increase, licensing and other revenue, which is our software technology licensing business, grew by over 80%, and data by 165%. You'll also notice that for the first time, we're including issuers. This is as a result of our acquisition of AQSE, and that is a business that we continue to invest in, and we think will strengthen as the number of new companies listing on there continues to increase. It's worthwhile picking up on some of these, and I'll do so in a minute, go into greater detail on the different divisions that we have. Should also touch on the expenses, a 37% growth. We would typically see our expenses grow around about 20% because we wish to continue to invest in the business. The additional amount was as a result of some key hires, but also the inclusion of AQSE after concluding the acquisition in March of 2020. Net result is we produced an EBITDA profit of 1.5 in comparison to pretty much a break-even in 2019. And after charges for depreciation, amortization and the like, a profit before tax of £500,000, which compares very favorably with the 0.9 loss of last year. We got tax credits as a result of this continued investment in R&D, and so a profit after tax of 1 million. And I'd also like to touch just briefly on the balance sheet strength. We have a very strong balance sheet. It affords us the opportunity to invest when we think it's appropriate. But you'll see that our regulatory capital surplus increased from 11.1 to 11.8. But perhaps more importantly is that the net cash position of the business increased from 11 to 12.3, which for those of you who will sort of analyze profit versus cash, will see that that represents a cash conversion rate of over 100%, which I think underpins the way we're running the business. If I move on to the next slide, and we go into have a look at the exchange business. A couple of things I'd just like to highlight. We've touched already on the breadth of offering on AQUIS Exchange, 1,700 stocks and ETFs over 15 European markets. The inclusion of the Swiss market since the 4th of February after the UK-Swiss agreement, and the MAC product, which competes in the closing auction directly with the national exchanges, which is we are the only exchange which offers competition there. And the other thing I think which is really important is that Brexit was a huge undertaking. I mean, it was for everybody, we recognize that, but for an exchange, the risk and the complexity of that transfer of trading overnight from the UK to Europe was really quite an undertaking. And I'm very pleased to say that as a result of both phenomenal amount of work from the team, but also the quality of the technology, it was handled completely seamlessly. And the feedback from some of our investment banking members is that that it was really great in terms of the result for them. And unfortunately, some of our competitors didn't have necessarily the same experience. If we look at how we're going to take the business forward in the future, we're already starting to see some synergies from the AQSE acquisition in terms of exchange membership, and gives us the opportunity to offer our clients, those that in the past may have concentrated on a single market, the UK market, they now have the opportunity of an extended membership and to trade into Europe. We will continue to invest and create new order types, and we perceive that as indicated by the 50% increase in trading, we expect to see clients moving into the higher tiers over the future. Turning to the subscription model, this is a slide that I suspect most of you already seen. It sets out our subscription pricing model. It is very, very transparent, I think, very clear. And the one thing I would highlight is that we introduce a new tier. So the new unlimited tier is for trading over 50,000 messages a day over the course of a month. And for that, clients will now pay £80,000 a month. Moving on to AQUIS Technologies. Strong revenue growth, as I mentioned before, as a result of some new contracts and contracts with existing clients. But actually, the thing that is really interesting in terms of future opportunity is the proof of concept with the Singapore Stock Exchange. This is the first time that anybody has been able to demonstrate that you could put a large-scale exchange platform into the cloud, and you can get the level of performance that is required for operating a continuous trading exchange of scale. Why is that important? Well, it's important because it gives us the opportunity to offer a completely new concept for exchange clients, in particular startups. One of the big disincentives if you're setting up an exchange, and of course there are lots and lots of new exchanges coming on board, those that are looking for digital assets, cryptocurrencies, or even existing exchanges whose model doesn't really work, is there is always a significant investment in hardware and in data centers to establish that exchange. As a startup, that's a big disincentive. Cloud technology allows the startup to establish something at the right level of scale. And then as their business increases, so they can seamlessly increase that footprint. And so the cost goes hand in hand with the progress of their business. So this offers a lot of opportunity for us as an exchange technology licensing provider to increase our footprint. But it also demonstrates, I think, to the marketplace the quality of the AQUIS technology and why it gives us great confidence that this business will continue to progress in the future. Moving on to the next slide, data. Data revenue is something which is very important. The national exchanges in the past have profited enormously from the sale of data. Our data, we've never charged our members, and that is a policy that we intend to continue with. But we do charge vendors and end users for data. And the acquisition of AQSE allowed us to integrate the two data offerings to harmonize the way we charge, and that resulted in a significant increase. And we do anticipate in 2021 that the growth in data revenue will continue to move forward. It is a very important part of our overall revenue offering, and I would add is that there is opportunity for those of you who may have heard of it. The possibility is that the European Commission will be looking to introduce a consolidated tape at some stage in the future. This could have a great beneficial effect on AQUIS, but in the meantime, we're very, very confident that the data, our data, which with the AQSE is a unique data set, supported by AQUIS Exchange data, is something which is both very important and something which will continue to help in terms of our revenue growth. I'm now going to hand you back to Alistair, who will cover AQSE.
Thank you very much indeed, Jonathan. As I said earlier, we purchased NEX Exchange almost a year ago. We paid £1 for it, And we really wanted here the recognized investment exchange license. In the 9 months since we have bought this business, it's delivered revenues of 1.2 million and a loss before tax of $500,000. That is a lot lower than I think people were expecting. And we've done that by actually integrating our technology, the cutting edge technology here, getting that connected and making quite certain that we have the right staff in place to do this job. We are pretty confident we have a remarkable sales funnel of issuers coming to the marketplace. I'll talk about that in a second. I'm very confident that next year, this company in its own right will become profitable. We took a market consultation process shortly after buying the company, and it was from listening to the market that we understood very, very clearly that the industry wants competition. The industry wants to see a platform that is appropriate and proportionate in its regulation and make quite certain that it is doing something different to what the London Stock Exchange is by creating this market for the new economy. In other words, this NASDAQ of Europe. Let me just change slides. How do we do this? And what are we going to do? Well, it's absolutely essential that any form of competition in the primary markets has to have institutional and retail support. I think if you go and look at a webpage on our website, you will see a number of institutions who have backing the stocks that are on the AQUIS Stock Exchange today. I think a lot of people seem to think in the past that institutions wouldn't invest in companies that are actually quoted on the AQUIS Stock Exchange. It isn't true. We brought a company to market last week called Samarkand, an e-commerce business. We know that over 25 institutions were interested in investing in that company. And more importantly, because it introduced we force a growth prospectus. The growth prospectus is an abbreviated prospectus, not lowering standards, that still needs UK Listings Authority approval, so it goes to the FCA, but is a shorter edition. And what does that mean? Is it means you can come to market faster. You actually increase the standards over the AIM market, because instead of having an admissions document, you're using a prospectus. And most importantly, it brings the retail market or the qualified investors or individual investors in at the IPO. So creating the right investment community for issuers to come to our market is a really, really important thing to do. But in doing that alone is not enough. You have to raise the standards. We have to have the proper connectivity to every online broker. A recent ShareSoc survey that we did with them shows that 82% of respondents, the retail market, want access to every market and every growth stock. And today that isn't possible, but I'm delighted to tell you that it is changing. Companies like AJ Bell, Hargreaves Lansdown, Interactive Investors are all soon going to be able to have electronic access. IG Index in the summer will have electronic access. You have access today through Smart Invest and Barclays, through Jarvis, through Share Center. So it is possible, but we understand that it has to happen. You've got to allow every single retail investor the opportunity to invest, and that will enhance liquidity. Now, one of the criticisms I've always had of the UK market is that we end up with one regulation of a one-size-fits-all. Companies, I believe, are like children. They start small, they grow, and they mature. And it is absolutely essential to make quite certain that you have the proportional regulation and the appropriate trading mechanism to allow companies to raise capital as and when they need it in the public markets. And in order to do that, we all know that a company that has a market cap of 10 million trades and needs a separate set of rules than one of 300 million, which is again totally different to a company that might be 3 billion. At AQUIS, we've segmented the market. the growth market into two areas: access, which is like our primary school to people to learn about being a public company; Apex, which is like your secondary school, which actually allows you to really learn, grow, and build. And then eventually, when you become that adult, you've got your university, which is our main market. And it's through that segregation, we're allowing companies to start at an early stage and develop without having to change exchange at enormous cost, bring in proportional rules and regulations that are appropriate to the type of company that it is, and protect those companies to allow them to mature and become the businesses that they need to become. Now, you can only do that. You can change the standards. You can change the rules. You can bring the investors to the market. But one thing that is absolutely essential is you have to have liquidity. If you don't have liquidity in secondary trading, then there's almost no point of being a public company. One of the things I think when I look back at the NEX, if I look at ISDX, OFX Plus, whatever it's been called, it has never achieved liquidity, it's never achieved the RAE standards, and it's never achieved the institutional and retail investment. I think we can change all that. On liquidity, we've introduced a market maker scheme, a scheme where we actually gift warrants to market makers in our AQUIS stock exchange, not in the public company, but in the stock exchange business, up to a maximum of 19.9%. And in return, these market makers, and the ones signed up are Winterfloods, Peel Hunt, Shore Capital, Stifel, Canaccord, etc. These market makers have to make a price for retail market no wider than 5%. And if you get capital provision from market makers who are competing in this SME market, you get narrower spreads, you get connectivity to the retail, and you start getting liquidity. Now, we introduced this at the very end of last year and started it on the 4th of January. In our Apex stocks, which are 20 stocks at the moment, with an average market cap of around 80 million, so very, very comparable to AIM. These stocks here have seen spreads decline by 64% and turnover increase by over 700%. And those are the February numbers, and I know that there's a further increase in March. So a lot of people turn around to me and say, why would a company come to AQUIS and not go to AIM or the London Stock Exchange? Well, the answer, I believe, is simple. If you want to come to a market specializing for the ratings for growth companies, we give you a higher standard in the Apex segment because you have a growth prospectus. We give you retail access into your IPO. We give you retail commitment and connectivity to the major online brokers. We give you liquidity guaranteed from market makers, which is going to be there for you to be able to trade. And then one of the most controversial things which has gone down, we believe very well, is in that growth segment, we are banning the short selling of shares. Because what we feel is that an issuer, an entrepreneur, needs to be able to do what they say they're going to do. And in these less liquid markets, which they will always be less liquid than the FTSE stocks, in these less liquid markets, it's very simple, people, to crush a price. And we don't think that is fair or right, because the impact is these companies go down in value, their share price falls, they can't raise capital, and their staff start to leave. And by definition, those companies actually lose. And then going bust, the person who shorted them is the winner, the issuer loses, the entrepreneur loses, UK loses because it may be a very, very successful business in the future, and the long-term retail investor and institutional investor loses as well. So with us, you get higher standards, retail, liquidity, protection through no short selling, and a direct relationship, unlike, again, AIM, where you have to deal through your Nomad, you have a direct relationship with the exchange. And all of that for a cheaper price. And it's cheaper. We're not selling ourselves as cheaper. It's cheaper because we're more efficient. The growth prospectus for Samarkand, for example, was 150 pages long. It was explicit. It was detailed, but it didn't have the 250 pages of risk assessments that might be there in a normal prospectus. It's still approved by the UK Listings Authority, so it's still reaching those standards, but it's templated. Therefore, on AQUIS, you can come to the market quicker, cheaper, and get more. And on that note, we've got a number of videos on our website, which you're more than welcome to look at, but I'd just like to play one of those videos now.
Introducing AQUIS Stock Exchange. AQSE is a UK-based regulated stock exchange dedicated to helping today's growth companies raise capital and become public businesses, with both institutional and retail shareholders. There are some 18 sectors represented on AQSE, including beverages companies such as Chapeldown, Shepherd Neame and British Honey Company, mining concerns like Tectonic Gold and Cadence Minerals, to medical firms such as Rutherford Health, Sativa Wellness, Incanthera and True Spine. In addition, AQSE has admitted companies as diverse as blockchain investor KR1 and renewables operator Good Energy to our Arbuthnot Banking Group and Newbury Racecourse. So, what makes AQSE different? As well as truly championing entrepreneurship, AQSE is focused on improving the secondary trading of stocks by increasing liquidity, the lifeblood of markets, narrowing spreads, installing state-of-the-art technology, and by broadening participation in the market.
Over the last few decades, we have seen a dramatic decline in the number of companies coming to market. AQUIS's mission is to reverse this trend and be there to support companies and investors.
Many of the UK's top corporate advisors and brokers now support this mission and partner with AQSE. There is also a powerful roster of well-known institutional investors supporting AQSE companies. So if you want to take your company to the next level, partner with AQSE and experience our unique level of personal service.
We're delighted with our experience so far, and it's a delight to work with the team at AQUIS. They're very hands-on and I have to say very innovative thinkers.
Call us now to discuss your IPO and contact your broker to trade AQSE shares. AQSE, the home of growth companies.
Well, look, I'll just finish with saying that I am very optimistic about 2021. We have a strong team in place. We have the technology to help us, and there are the three core things that AQUIS prides itself on: transparency, technology, and innovation. In the case of the exchange business, the original business, it was the use of cutting-edge technology. It was the transparency that a subscription pricing model gives, and the innovation of bringing a rule that prohibited the aggressive trading of proprietary non-client businesses that has helped us grow to the largest liquidity pool in Europe. On the AQUIS Stock Exchange, it is the technology that can connect us to all the retail and wholesale brokers. It is the innovation of a rule such as banning short selling, and it is the transparency of forcing a growth prospectus and having standards where full disclosure is available to the industry as a whole and not hidden away, as we can sometimes see on lower grade exchanges around the world. We've created and had our first maiden profit, which gives us a platform for future growth. It gives us confidence. We believe it gives our investors confidence. And I think it has changed the way that people perceive AQUIS as a whole. As Jonathan mentioned earlier, we will continue to invest, but never at the level that I believe we can attain in the revenue growth. But of course, we think there are some tremendous opportunities out there, and we want to capitalize on them by making the right investments, by getting the right people, and continuing to strengthen our sales, continuing to strengthen the beachhead that we've made in the French operation to expand into Europe. And with that, I'd like to open it up to questions for the audience. Thank you.
Brilliant. Thank you very much to both Alistair and to Jonathan. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review investor questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. I'd also like to remind you that feedback is important to the company, and immediately after this presentation has ended, you'll be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations, and would be most grateful if you could allocate some time for that. Alistair, Jonathan, obviously investors had the ability to pre-submit questions ahead of today's event. We have two that I'd like to start off the Q&A with before, of course, addressing those that have come in during the meeting itself. The first question is, how many companies are currently listed on your exchange, and what support have you seen from institutions and asset managers? And I know you have touched on this, but perhaps I could ask you to expand a little. Yeah,
absolutely. There are 90 securities on the exchange today. I think what is very encouraging is I can tell you that the sales funnel today has over 50 companies that we're talking to that are genuinely interested, either delisting from another exchange, dual listing from another exchange, or completely starting from new and coming to us. We are getting calls now every day from businesses interested in looking at raising capital through the public markets, which I think is, again, very, very encouraging. Who are the supporters? Well, I think I mentioned that a bit, but the investors in AQUIS Exchange PLC, we have, and by all means, please look up our investor list. We think we have an incredibly high level blue chip investor base. Most of those are signed up on the webpage. Those who don't, often it's the reason that they can't, for reasons, put their logo on somebody else's site or whatever. But I think we have tremendous institutional support, and we can see that from the latest IPOs we've had, where, and I think I can mention here because it is public information, but we've seen people like Unicorn or Octopus, and we've seen support from the Schroders or the Premier Mitons and the et cetera, et cetera. So these are names of people who have invested in AQUIS stocks recently. And of course, I am passionate about bringing the public back into the public markets, and it is so important that we have access. So not only do you get the retail, the institutions, it's all very well getting institutions, but you also need to find that retail investor. And I think I'm incredibly encouraged. I've seen chat rooms, I've seen a lot of what goes on social media, and I think we're getting tremendous support for that.
Thank you for that. The second and final question that's pre-submitted is, what do you see as the main advantages to companies listing on your exchange as opposed to the London Stock Exchange?
Well, I hopefully I went through that, but I mean, in short, you get a higher standard because you've got this in the Apex market here. Or if you want to have the equal standard to AIM, you can go into our access, but then we're looking to promote those people once they've achieved the requirements to get into Apex. So you've got standards that actually allow retail in at a much, much earlier stage. You've got this liquidity pool, which is growing all the time, and we think will grow further once we've got the full connectivity. We've got this ban on short selling, which is a simple rule that we have, which obviously designated market makers can sell short. They have to be able to, otherwise you can't create the liquidity, but other people can't. And that is a firm rule of ours of which we do not budge. You have this no nomad fee. You have this relationship with the exchange rather than having this sort of what I think is like a Chinese whispers type thing with the nomad. And of course, it is faster because we've templated the prospectus, we've templated the documents, we've used the technology. It is more transparent because the information we have is machine readable. So companies have to have disclosure. If you don't want to disclose, if you don't want to be transparent, then you cannot come to the AQUIS Stock Exchange. And we've turned 7 companies down already that we didn't think had the right criteria to be part of what we think is going to be an incredibly successful growth market. So I think that, but you do get it. Now, I've seen some documentation out there. It is anything from half the price to 2/3 of the price of taking a listing somewhere else. So maybe it's my Scottish ancestry, but in this case here, something where you really can get more for less. The only difference you get is that if you want to go to the London Stock Exchange, you've got the letterhead, you've got the recognition. It's like you can't be fired for buying IBM. But frankly, as a technologist, I would say maybe you should be fired for buying IBM. The paradigm has shifted, the technologies have changed, and now it is important for you to look at alternatives. So if you are one of these growth stocks, these e-economy stocks, these digital type stocks, then absolutely AQUIS is a place where you can come to the Challenger Exchange. And on top of that, I can turn around to KR1, which is mentioned in the video, has grown from 20 million to 260 million market cap in a relatively short period of time. Retail investors want to trade in those. Well-known names like Shepherd Neame are up 46% this year. Sativa up 47 or 48% this year. Tectonic Gold mining stocks up 400% this year. These are the things that retail want to play in, and they must have access. And I think that, you know, by the time we've finished with all these online brokers, we're going to see a tremendous change on the way that people and the retail market, as I said, share SOC and this thing, 82% of people wanted access to all markets and all stocks. And that is exactly what we intend to give them.
Thank you very much indeed. Well, look, that takes care of the pre-submitted questions. If I could ask you just to click on the Q&A tab on your screen. If I could ask you to just read out the question, perhaps who it's from, and then give a response where it's appropriate, and I'll pick up from you at the end if I may.
I'll literally start at the top here. Simon has said, can you explain the IPO process for retail investors on your Apex platform, i.e. how can we access IPOs, which sets us apart from the London Stock Exchange? It is there exactly. You know, a public market is for the public. And what we want to do here is the corporate advisor, in the case of Samarkand, the corporate advisor took in the individual investment criteria into the book build and therefore allocated it out. We anticipate this happening through the likes of the AJ Bells, etc. in the future, because you should have access as a growth prospectus, then qualified in certain cases and retail in other cases will have access, and you should be able to do that straight through your broker. If I look at the next one here, Brian has said, what are the company's 2021 financial targets? Jonathan, you might want to answer that of what the analysts reports are saying.
Yeah, certainly. So the analysts are predicting that we should be targeting 2021 revenue in the region of 15.6 million. And so that is representing again substantial growth on 2020, and a net profit before tax of around about 2 to 2.2 million. So that's the analyst predictions at the moment. That I think reflects the growth in all the business lines. We anticipate that revenue will grow across the 4 main business lines. As I mentioned earlier, we'll continue to invest, and so expenses will grow, but not by the same rate. And that I think is what the analysts think we should be able to achieve in 2021.
There's a very interesting question that's just come in now, which is how do you avoid companies pumping their share prices up with false or misleading RNSs? I think it's a great question. It came from William. And the answer is, as a tech company, which we are, and as a equities business, which we are, as the 7th largest exchange in large caps, we have incredibly sophisticated surveillance technology using artificial intelligence and machine learning. And in fact, we're public in the fact that we did a government scheme with the University of Derby about artificial intelligence. It is absolutely essential that the standards remain high. If an advisor doesn't reach the standard, then they will be removed from our list of advisors. If companies disobey rules, then actually they will be censored, because it is disgraceful to have false statements in RNSs. That is the information. We want fair and equal transparency of information across the market for all investors. And I think we need to make that very, very clear. Oscar has come up with a question: do you think other exchanges may adapt the flat fee pricing model you introduced? And if so, would that create a competitive threat to your business model? It's something we think about all the time. It may be a very arrogant statement, but in the front of every presentation we give, we always put one day all trading will be like this. And the reason, and I think the example there is, people may remember Blockbuster, who used to laugh at companies like Netflix because they never believed that they could lose their dominant position. And I have to say, and it might sound arrogant, that the model of the future here for the trading of equities has got to be subscription based. I really believe that every investor will be able to pick up their smartphone, trade any asset class they want to on that smartphone through an app for a de minimis price. And they should be able to do that. And that is what creates, this is what is going to create the transformation from the traditional way that stock exchanges have operated to the new way that stock exchanges operate. And the best model to do that is one that is transparent and changes human behavior. And we know that subscriptions change human behavior. There are facts out there. Amazon Prime in America, the average user spends $1,000 a year, but the average Amazon user spends something like $500 to $600. So we know it changes the behavior of the way that people operate. And therefore, I do believe that one day the other exchanges will wake up, and we've started to see it happen. People have started to change price. They've started to do all sorts of different things to protect their businesses. But one day they will probably have to move. Now, if that happens, it is then who is the lowest cost provider? And AQUIS is the lowest cost provider here. It's unlikely these people will come in and ban the proprietary trading businesses, but they may, but it's unlikely because that is often the largest revenue driver for these companies. But to bring in a subscription model, I think is very likely at some point. And there it really does down to efficiency. And I think here is when we have AQUIS Technologies, an absolute leader. We have, as Jonathan said, 52 staff today. Yes, we will grow that because we need to invest where it's appropriate. But those 52 staff, I often jokingly say, slightly less than the catering departments of the national exchanges across Europe. We have a low cost base. Everything that we have here hits the bottom line. That's why we love the business model that this operates on. So it's about technology, it's about process. And we've done that in the large exchange, in the large cap exchange business. And now we're moving the same concept to the SME market for the primary markets. And that's why we want to change primary. Michael has put, love the short selling ban. How do you actually ban short selling? Well, it's a pretty simple rule. Stock exchanges, we are a recognized investment exchange, which operates an MTF, which is our growth market. And the growth market has all the privileges of every growth market. So on Apex and Access, no stamp duty, no inheritance tax relief, all those privileges. But how do you ban it? Well, we set a rule. You disobey the rule, we're the regulator. We can come back. Now, can we actually find out whether somebody's done it? That is to do with the technology, and that's to do with the sophisticated surveillance technology that we have. And we believe we can. And somebody who blatantly wants to disregard that rule, I think is in danger of not reaching the standards. And again, will go through the same punishment. Let me look at some of these other here. Vishal, you've asked a question about liquidity, talking about trying to get an idea about the value of a consolidated tape and how we should look at that. Maybe we can take that sometime offline. The consolidated tape, we've harmonized data, and data has become, as you saw last year, 165% growth. I think you'll continue to see that growth because we've harmonized the data of the AQUIS stock exchange along with the AQUIS exchange, the large cap and the primary markets. There's enormous value in primary markets. So as we grow, and over the next few years, I do believe we can bring hundreds of companies to the AQUIS stock exchange. Then what we will want to do that is monetize through data. You don't monetize through listings. Our listing fees are something in the region of £10,000. Our fees to the companies are de minimis each year. That is not how an exchange makes its money. It makes its money by getting great companies where people want that data. So if we look at Samarkand, we look at KR1, we look at the companies that have started to grow substantially on our marketplace. People want that data, and they'll pay for that data. And they should pay the right price, not the exorbitant prices we see today from the national exchanges. But if a consolidated tape comes in and it replicates that of the United States, then those people who have market share and provide lit market rather than dark market get a premium, and they get the allocation of the revenues created from the Consolidated Tape Authority. That is substantially higher than I think any analyst today predicts. And I'm very happy to talk, if people want to come back, about how we view that. Now, we don't know how the consolidated tape is going to operate. We don't know if there'll be a consolidated tape, but certainly recent noises from both the European Commission and ESMA have indicated to me, and my personal view is that we will discuss consolidated a lot in 2020. There will be RFPs going out there for people to provide a consolidated tape authority, whether it's something like the fixed community or whatever, in 2021. And then, in 2021, we'll discuss it. In 2022, there'll be the RFPs. And in 2023, I think there's every chance we'll see a consolidated tape in Europe. But I think to get into the intricacies of how to measure that and how to value that really depends. It's very, very difficult because it depends on where people price. One thing for certain about data is it has to come down in price from the exorbitant prices we see today from the national exchanges. David has written, congratulations on your maiden profit. Thank you very much. What will be the effect of Brexit and the lack of equivalence decision? I have been somebody who has been absolutely adamant that equivalence is not coming back from Europe, certainly in the equities space. So I think we have lost European trading, and actually that's not necessarily a bad thing for the end user. The end user here, the worst thing that could have happened is to see fragmented liquidity. So in other words, stocks like Total would trade partly in London, partly in Europe. When you fragment liquidity with no competition, it's not a benefit to the end user, it's a cost to the end user. Here, what we've seen is a physical movement of 100, in our case, 99% of our business shift overnight to Europe. And therefore, the end user doesn't actually change. The cost is zero. The cost to AQUIS is, the cost of us establishing the business, and which is why we want to leverage that business by putting more staff into the French office and expanding that to get greater sales. The next battle for Europe and the UK will be over euro-denominated swaps, which is a totally separate discussion. And that really is the battle that both parties want to win. The danger, of course, could be is the United States could win out of both the UK and Europe. And I think Brian has said, are there any transformational acquisitions in the pipeline? I can safely say at this point, obviously I couldn't tell you if there were, but I can safely say we are not looking at making any acquisitions right now. We will always look at opportunity. We will always look at investing, and we'll always look at investing for growth. And on that note, I'd just like to say to everybody, look, thank you all for your support. Many of you I've known for a number of years. Thank you very much indeed for listening today. And I think I leave you at probably the most excited moment I've ever known within AQUIS. I really do believe we have a very bright future in front of us. Thank you.
Alistair, Jonathan, thank you very much indeed, and perfect timing. With just a few minutes left till the end of the session, so thank you for the update today. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide feedback. If you access this meeting from our website, then the feedback page will appear. But if you access this via the link sent you by email, you'll be simply asked to log back in to submit your feedback. And I think the company will find it very useful to hear your thoughts and expectations. On behalf of the management team of AQUIS Exchange, I'd like to thank you very much for attending today's presentation. That now concludes today's session, and good afternoon to you all.